Hello, welcome to SuperReturn Asia. I'm Sarah Clarke and we're coming to you from the JW Marriott Hotel. Now I'm joined today by Mark O'Hare, who's the founder of Preqin.
Good morning.
Thank you for joining us.
Lovely to be with you, thank you.
Let's start on one of the key topics that's been discussed this morning, exit strategies.
Yeah.
What exit strategies are prevalent across Asia? We can go through each market.
Absolutely. Well, the one that gets all the noise, all the kind of press coverage is IPOs. And they have been important, but IPOs come and go. They're very important for some of the big venture investments and so on, and they capture a lot of noise, and they have indeed been significant at certain times. But that market ebbs and flows. And if you look at where most of the money is coming from in terms of exits, there's been a lot more from trade sales. So as you heard in the panel we had just now with three leading private equity firms based in China, based in India, based in Southeast Asia, they're seeing most of their exits from trade sales to corporates. So what they're doing is they're growth investors, they're buying relatively immature businesses, they're growing them, they're developing them, they're raising the game across everything, across infrastructure, across corporate governance, across marketing, across manufacturing, and preparing those businesses to be really attractive acquisitions for strategic buyers. And that's probably the bedrock of exits in Asia.
Okay.
Is trade sales.
And of course, Asia's a massive market. Each market is very, very different. What, say, is the most prevalent, say, in the likes of Greater China?
I think you're absolutely right to implicitly correct me there. We talk about Asia as if it's a market. It's not. Asia is 4.6 billion people. It's 60% of people on the planet. It's 11,000 kilometers from one corner of Asia, the northwest of China, to the other corner, New Zealand. It's massive. It's not a market. It's several different markets. So you're absolutely right. China, is by some reckoning the largest economy on the planet now, and it's now the biggest market for venture capital deals. Given its size and its relative maturity within Asia, because it's a very mature market, IPOs are actually pretty important in China. Still, in the last year or two, trade sales have been more important, but China is probably the most important place in Asia for IPO exits, especially for venture firms.
Okay, Northeast Asia, let's look at Japan and Korea. Is there a trend in that market?
There's a lot of the exits are strategic exits there to corporate buyers, and I know we're talking about exits, but really interesting that we've just seen the Toshiba deal, $18 billion, the biggest private equity deal since the global financial crisis. And I think really interesting that the private equity buyer there, Bain Capital, one of the world's leading firms, actually is making the acquisition in partnership with some really serious corporates, with Dell, with Apple, and with others. So a real integration of private equity into the corporate and financial world.
Okay, you've also talked about all the data and looking at the market, how it's changed. You mentioned the market up until 2010, more money was coming in than going out. What happened then? And you've also talked about 2016, Asia started to deliver a net cash flow. Why?
Yes. Look, it's been the recovery since the global financial crisis has been kind of in financial markets very, very strong, helped by quantitative easing and helped by low interest rates. Now, at the same time, LPs, the investors in the funds, have been putting more and more money into funds, so private equity firms have record levels of what we call dry powder, the amount of money that the LP has committed but hasn't yet been invested. Now, if one was cynical and said, well, GPs are going to be, go to town with all of that money, they'd be off buying loads of things, making lots of, investments. They've actually been amazingly disciplined. And yes, deal flow has improved. There've been more investments made, but they've actually been dwarfed by the exits. So the private equity firms have been very disciplined and realized that there are times to be a net buyer and times to be a net seller. And guess what? Now is one of the times to be a net seller because valuations are so attractive. So I put it down to really good sense on behalf of the private equity firms, who are, after all, the custodians of their investors' money. They've done a great job, and they've been very disciplined about exiting where they can. You've probably heard phrases used like selling everything that's not nailed to the floor, and there has been a bit of that. They've been really great at exiting at good prices and sending that money back to their LPs.
Okay, so venture capital, there's been a surge in activity. Has that been driven by China?
In Asia, absolutely. Look, I mean, venture capital is the oldest and most established part of the kind of private capital world. It's been around for kind of 40, 50 years, depending on how you reckon the start. And until now, it's been made in America. It's been initially kind of Silicon Valley and the West Coast, but now also kind of the Boston area, the Research Triangle, and so on. In the last 4 years or so, it's as recent as that's changed, and now deal activity in numbers and value in China is pretty much on a par with the US. And I heard yesterday here at the conference that one of the absolute bellwethers and benchmarks of the industry, Sequoia Capital, one of the most august firms, now has more people in China than in the US. So now, should we be surprised about that? No, we shouldn't. We have a huge economy, a rapidly growing economy, a young young demographic, urbanizing, so a lot of change going on, and they need kind of technical solutions and products and services aligned for them. So that's what's driving it. And yes, China is an enormous driver of venture activity.
So looking ahead then, and that kind of leads us to the last question, can the private equity market in Asia, can it eventually, or how soon, could it outgrow the West?
I think your second characterization of the question, how soon, is the right one. Yogi Berra, the baseball commentator, once said predictions are always difficult, especially as regards the future. So I'm not going to predict when, but I think that is the right question. It's when, not if. Kind of private capital and venture capital in Asia, kind of becomes the hub of the world. Look, Asia's, 4.6 billion out of 7 billion people on the planet. It's, in the next, between now and 2025, we're going to see a net GDP growth of $11 trillion in China, plays 2.7 trillion in the US. Why would Asia not become the biggest part of the global private capital industry? And if I may make a small advertisement for Preqin, we're a global supplier. We're investing very, very heavily in Asia. This week we've opened our Guangzhou operation, and we're delighted to be here. Very excited.
Congratulations on that one, and thank you also for joining us, Mark O'Hare.
Thank you very much.
That's all we've got time for, but if you'd like to see more conversations like this, the one we've just had with the founder of Preqin, Mark O'Hare, just go to Twitter, look for #SRAsia. Thanks for joining us, and bye for now.